Hey, Jeff, let's do a thought exercise.
Let's do it.
All right. So let's say you have $1,000 to invest, or really any amount of money, but we'll just use $1,000 just so we have an arbitrary amount of money.
Got it.
You want to invest, you want to find some like risk reward, high upside stocks. You also want to think about taking some risk off the table, owning a good high yield dividend stock, one that you can kind of hold through everything and you know you're going to get that income. But you also want to have just a really good high quality company that you think has lower risk. It still could be volatile, but it's got a good chance of being a market beating stock. So those are our three buckets. What do you say?
Let's do it.
All right, before we get into it, we have a great opportunity for you to supercharge your investing returns. Our sponsor for this video is the Motley Fool. If you go to our special link, it's fool.com/unscripted. Go to that link. You can get access to the Motley Fool's 10 best stocks to buy right now. We're going to leave the link on the screen the whole time. Be sure to check that out. That sponsorship is what allows us to make this great content. We like our partnership with the Fool, and it's worth checking out. All right, Jeff, where do we want to start? Do we want to start with kind of the safe end? Go ahead and get the safe stock in our portfolio.
Yeah, let's go from safe to fun. And we're giving the beginnings of a nice little portfolio here. You can get more ideas from the Motley Fool link. Yeah,
there's a reason you have the salad first and you save the dessert for the end, right?
Let's get the boring but steady stuff out of the way. So let's start with our solid dividend payer. So we agreed on this one. We were thinking, what would be a good solid dividend paying stock that we both feel comfortable sticking into a portfolio? If we had $1,000 to spread around, where would we put it? And we both came up with Realty Income, ticker symbol O. I used to own this one and I sold it a long time ago, and I keep kicking myself for that decision and debating getting back into it. I know you currently own it, Jason. But they are a real estate investment trust. They are obligated to pay out at least 90% of their earnings as dividends. So right off the bat, you're going to get a steady dividend. Essentially, they own single property real estate in some very durable industries. And that durable industries piece is what is compelling to me, because we're always heading towards a recession. We just don't know when.
Right.
And this is the kind of stock that will do better than maybe some other stocks if we do hit an economic downturn. And the reason is the types of businesses that are in their properties. So for example, 11% of their portfolio is grocery stores. Another 10% is convenience stores. Another 6% is home improvement. Another 6% is dollar stores, right? So you can just imagine things get bad in the economy. These are industries and types of businesses that people will go to in all economic climates.
Yeah.
So there's less of a risk of them having vacancies, right? Buildings that are not rented out in an economic downturn. And of course, these are all businesses that are going to do fine if the economy is doing fine. So steady dividend income, safe industries that lease out the properties that they own, just a real good sort of solid foundation for a portfolio.
Yeah. Since the company went public in 1994, they've increased the dividend every quarter, actually, not even every year, but every quarter. It yields about 5.3% at recent prices, which is attractive. With interest rates going down, that could be a catalyst to push the stock price up. That also means lower cost capital for them, which helps them when they refinance existing debt, and also new debt they take on, they can get better rates. So there's a lot of things that I like about Realty Income. I think it's a good fit here. It's going to be a very consistent income generator and a reliable, safe investment. I think that's a core if we're looking for stability as part of our portfolio that we're building here. All right, in the middle, what are we going to put in the middle is a stock that we like its potential. It might be volatile during downturns, more volatile than Realty Income, but we think it can be a market beater. What do we fall on here?
So I suggested this and you thought it was a good addition, Google, Alphabet.
Yep.
We talk about the Mag 7 all the time, and I feel like for whatever reason, Alphabet seems to slide under the radar within that Mag 7. Meta gets a lot of talk, obviously NVIDIA does, but I think as it pertains to AI specifically, which is obviously the big thing happening right now in the markets and in the world, Google has a advantage that I don't think is matched by any of the other AI companies. And that is the fact that millions and millions and millions of us use Google's products every single day. Google Maps, Gmail, Google Calendar, YouTube. And they're all free and they're user-friendly and a lot of people use them. And guess what? All of those are going to be tied to already and more over time. Gemini, which is Google's AI platform.
Mm-hmm.
So there's a lot of reasons to like Alphabet as a stock, but one of the ones I want to kick off with is just this idea that as AI becomes more and more integrated into our lives, the point at which it becomes irreplaceable and a thing we all have to have is going to be when I think AI really becomes mainstream. And there's a good argument to be made that the integration that Google already has in a lot of our lives is just going to make them the easy go-to platform as a daily AI user.
Yeah, I think we would be blind to ignore and deny the fact that AI is not going to have any impact on the ad business for search. It will. I mean, there's no doubt about it. But they're already starting to unlock AI in monetization in other ways, like you talked about, as they integrate it across other platforms, actually selling it. I think it will be more valuable over the long term than the loss of ad revenue with people using AI more to answer questions that they're not going to be asking Google. But Alphabet's not going to be left out of that race. I think that's the big thing. I think we also forget that YouTube is part of Alphabet, and it's actually a bigger business than Netflix. Netflix has kind of grown a little bit since they've added the ad tiers, but that's a great, great growing business. Google Cloud, there's so many things to like. At 26 times earnings, I think it is a very attractive business that is likely to outperform the market. I think it is a great fit for our portfolio. So there we go. We have our stalwart, we have our market beater. Now let's put on some risk and some upside opportunity. I'd like to throw a couple of stocks in here.
Do it.
I think one of the easy ones for us, we've done a lot of videos. Tyler and I have, you and I've done a few as well. That's QuantumScape. This is the solid state battery startup.
Yeah. Look, if solid state batteries become commercialized and a thing, that could actually, I don't think it's hyperbole to say that it could revolutionize the whole push for EVs. The biggest reason that I think they have not taken off as quickly as maybe some people thought they would is there's still range anxiety. I own an EV and I have to think carefully about when I charge, where I go, how far can I go on this charge without having to stop. And also the infrastructure, where will I charge? Is this a slow charger? Is this a fast charger? Well, if you can put a battery in my car that basically matches the range of filling up a gas tank, that completely changes the calculus. That means that the next car I get, the second car I have in my house doesn't have to be the gas guzzler SUV that we use for long road trips with the family. It can be another EV. So for all of those reasons, this technology is something I'm excited about. Still pre-commercial, still a lot of work to do. I'm not saying this is imminent, but two big news stories in just the past couple months that really seems to put QuantumScape or at least reinforce the story they're telling, that they are on the path here and they will get there eventually.
Late August, they announced they had expanded their joint venture for manufacturing with Volkswagen. And part of that expansion was Volkswagen being able to sell some of that production to third parties. That means Volkswagen's excited about it. They probably had a little leverage too to be able to get that part of the deal. QuantumScape also told us that they have a joint venture with another OEM. And more recently, the beginning of September at IAA Mobility, they rolled out a Ducati race bike with solid state batteries that are produced using their Cobra manufacturing process, which is kind of the key to unlocking all of this. So yeah, the stock has rocketed from the fours to over $12 a share since the beginning of the year, even as we still are not there for commercialization, but we've seen a lot of progress, right? And I think it's real positive progress that OEMs are signing up to say, hey, we want to do this with you. That says there's something there. There's still risk, like you said, that it's a losing investment overall. But I think it's more about the performance of the business than it is about the stock price at this point. It's about a $7 billion market cap company. If this works, investors are going to make a ton of money. If it doesn't, we're going to lose. And that doesn't matter if it's a $7 billion or a $3 billion market cap. So I think right now there's more evidence that it's going to be successful. Let's do one more.
So when I think about stocks that I either own or want to own that fit into this speculative bucket, it's QuantumScape and then it's Rocket Lab. This is one that I actually do have a position in. Sort of a similar story to QuantumScape. They have been proving that they can do this. They've been launching rockets pretty consistently. They're building bigger and better rockets. And that's the next, I forget the name of it, Jason, you'll remind me, the next big rocket that they're bringing to the market that they're working on now. That's going to be like the next step in their progress. But so far, doing everything you want them to do to grow and to gain customers and to show that this is a business that can be successful. There is a there with this company, not as speculative as QuantumScape, because they're actually doing it and making revenue, but still huge runway for growth in front of this company.
Yeah. So Neutron is their next generation larger module that they're working on. Of course, Electron is their current stage, and rocketry is the opposite of what you think about for most businesses, where scale pays off. The more scale you have, the lower your cost structure are, the better you can get incremental margins. Putting stuff in space, the bigger the vehicle is, the more payload you have, the more fuel you need just to lift the vehicle. And then the more fuel you need to lift the fuel, right? That's a
Right.
losing battle. The math is very disfavorable. So their secret is they started with electrons starting smaller, neutrons going a little bit larger. And the key, I think, is what you're talking about, the fact this is not a pre-revenue business, $145 million in revenue last quarter, and the positive gross margins. Sure, they're a long way from having profitability, free cash, and those sort of things, but gross margins somewhere in the mid to high 30s. That's a great starting point. And they have a contracted backlog, which is really good. We're seeing the Department of Defense is looking at this business in some favorable ways in terms of national security. So whether the Trump administration's grand visions around the Golden Dome for the U.S., it's kind of like what Israel has, anything like that ever happens, it remains to be seen. But we do know that national security and space are certainly becoming more important as we see more and more of these commercial space operations come on. This is a business that's showing a path to get there. And this could be a $1 trillion industry. A lot of risk, $25 billion market cap. This is an expensive stock, certainly less margin of safety from this point in terms of like capturing upside. But again, if this is a winner, if the there that we see there is as there as we think it could be in terms of size, this I think it still could be a big winner. And by pairing it with QuantumScape, we've got two companies that are totally unrelated in different industries, kind of in different points on their path to success or failure. So it gives us a little bit of optionality in our portfolio where if either one of these does well, it doesn't matter how the other one does.
Yeah. If we were to actually allocate this $1,000, we would put more into Realty Income and Alphabet and smaller amounts in Rocket Lab and QuantumScape. But that doesn't mean that those more speculative companies couldn't overtake the portfolio in terms of performance if they really hit it big.
Yeah, that's exactly right. So how we divide this portfolio up, how you would divide this portfolio up, it's up to you. But that's 4 ideas of how you can diversify a portfolio across opportunity, income, and super high upside with big risk as well. Hopefully this was a fun video. Let us know in the comments what you thought. Be sure to check out our link with our sponsor, fool.com/unscripted. Go check that out and you can get another 10 great stock ideas right now.